Hello students, welcome back. This is Ms. Mercado speaking. This lecture is the second part of the lecture for chapter 3. The first lecture dealt with doing entries on a T account. Now this lecture is focused on preparing your financial statements. So I'm going to go over 3 of your homework problems that you have, which are exercise 310, 311, and 312, which is basically preparing an income statement, a statement of owner's equity, and a balance sheet. Okay, so I'm going to illustrate those 3 because based on past experiences, students have a little bit of issues preparing the financial statements, and preparing financial statements is super important. Okay, so this lecture is just going to be problem solving. I'm not going to go over any of the content in the chapter. Please go back in chapter 3 and read all of the chapter and make sure that you are aware and understand the information provided regarding preparing financial statements. Okay, so I'm going to jump right in because I don't want to take too much of your time. I just want this to be quick and fast. That way we can have an understanding of how to prepare financial statements. Okay, so this problem is pretty simple. They give you information. They give you a trial balance for Juanita's delivery service. Okay, so they give you this information that you have on your screen, and then with this information you have to prepare your income statement, your statement of owner's equity, and your balance sheet. So you're going to be using this information to complete the 3 financial statements. Now when we prepare financial statements, we have to prepare them in specific order. Okay, the first thing that you prepare is your income statement. Why? Because information from your income statement flows into your statement of owner's equity. The second statement we prepare is the statement of owner's equity, because information from the statement of owner's equity is going to flow into the balance sheet. Okay, so let's get started with the income statement. Okay, when preparing an income statement, there's 2 things that go into an income statement. Okay, we have your revenues and we have your expenses. So whenever you do an income statement, you need to remember what goes into this income statement. Okay, income statement, revenues, and expenses. Those are the 2 things that we bring into your income statement. Okay, so we always start off with our revenue. How much money did you generate? That is the first question we ask. How much money did the business make? Okay, we want to know how much you made in a specific period of time. Okay, so we're going to look at the trial balance provided, and we are going to identify which one is my revenue account. Okay, so we go through the list, and here we have an account called the delivery fees. So this is Juanita's delivery service, and she charges for delivery fees. Okay, so she delivers stuff. Okay, that's her job. She delivers stuff, and she made $9,400 delivering stuff. I don't know what she delivers, but doing deliveries, she made $9,400 during the month of September. Okay, so I'm going to bring in the account delivery fees, and because we only have one revenue account, okay, we're going to bring it to the second column. If we had multiple revenue accounts, we would put them in the first set of columns. We would put them here, add them together, and then bring my total to the end. Okay, because I only have one, then I can just put it on the second column over here. Okay, so if you have multiple accounts, you put them in the first column, you add them, and you take the total to the second column. If you only have one item, such as the case for delivery fees, then you can just take it all the way to the second column, which is your totals column. Okay, so that is my account. Now when I work on transactions, I like to scratch off or mark off the items I've used. Okay, and that's just for me knowing I've used this number. Okay, so I'm scratching it off. Now we're going to bring in our expenses. Okay, this is how much money you spend on your business, in the business operations. Okay, so the revenues is what you generated in income. Expenses is what you spent. Okay, so in this particular account, we have 2 types of expenses. We have wages expense and we have rent expense. And usually expenses will have the word expense on them. Okay, so we have 2 expense accounts. So we're going to go ahead and we're going to include them. Let me indent this a little bit so it can just be a little bit more cleaner. Okay, so we have wages expense and we have rent expense. Now this is a very basic income statement. In reality, income statements can be very long. We're missing a lot of accounts here, but this is just so we can learn the basics of preparing a financial statement, okay? So, revenues on top, expenses, how many expenses you have on the bottom. Okay, so my wages expense is $2,100. My rent expense is $900, okay? So now I'm going to get my total expenses. So I'm going to add those two together. Okay? You add all of your expenses up, and that's going to give you a total, okay? Now I can calculate my net income or my net loss, and I'm going to put a little note here, okay? So, if the revenue is greater than expenses, then you've got net income, okay? If expenses are greater than revenue, then you've got a net loss, okay? Very important. So if your revenues are greater than your expenses, you've got net income. If your expenses are greater than your revenues, then you've got a net loss, okay? In this case, my revenues are greater than my expenses, so I'm going to have a net income, okay? And how am I going to get my net income? Well, I'm going to get my total revenues minus my total expenses. And you subtract your expenses because that is money that you spend. You spend money on wages, you spend money on rent. So that has to be deducted. Okay, so you subtract your expenses from your revenue, and that's going to give you a net income of $6,400. Okay, and let me highlight this another color, that way we can see it. Okay, so that is what your income statement is all about. Revenues minus expenses. Revenues minus expenses. That is what we do in our income statement. We subtract your revenues from your expenses to calculate your net income or loss or net loss, okay? Whatever the case might be, okay? So that is your income statement. Now I'm going to go back over here and I am going to scratch off those two items that I just used. I don't want to get confused. I don't want to forget something. So usually what I do when I'm working out a problem, I print it out. I know we shouldn't be printing a lot, but I am a very hands-on person. I like to highlight, I like to write. So usually I print it out and then I work on it and then, work it on paper, and then I just upload the solutions to the computer. But that's just how I work. There are some students that do a fabulous job doing everything on the computer because they're more technology savvy. That is awesome. But I'm old school. I like to highlight and write, okay? Now, the second financial statement that we have is the statement of owner's equity, okay? So, for the statement of owner's equity, we're going to start off with the capital account for the owners of the business. Now, there could be multiple capital accounts depending, maybe we have 1 or 2 or 3 or 4 owners. In this case, we only have one owner, and the owner is Juanita Ray Capital. Okay, so we only have one owner. So just know that there are some businesses that have multiple owners, such as partnerships where there's 3, 4 owners, and each partner is going to have their own capital and their own drawing account. Okay, so if maybe we have Juanita and then we have Pedro, Pedro would have Pedro Garza Capital, Pedro Garza Drawing. Okay, so just know that it just depends on how many owners we have. In this scenario, we only have one owner, so we always start off with the capital account, the capital balance, if we have one, okay? If it's sometimes we might not have a capital balance, I don't know, but most of the time that information will be provided to you. So in this case, we have Juanita's capital balance, and this is as of the beginning of the period, okay? As of September the 1st. So this is the balance that we carried forward from the prior month, okay? And the balance we have is $10,000, okay? Okay, so let me mark that off because I've already used it. Okay. going to do is we're going to bring in our net income or loss, depending on what you have, for the month of September. Okay. So where am I going to get that number from? That number, we calculated it over here. Okay. So I'm going to bring that number over here. Okay. So my net income for September is $6,400. Now I'm going to put it in my first column because we have some calculations that need to get done. Okay. So we're going to do that in $6,400. And then we are going to subtract any withdrawals that the particular owner made. So any drawings is any money that the owner withdrew from the business for personal reasons. Okay. So in this case, we have a withdrawal of $1,000. Okay. So we're going to do less withdrawal for September. Withdrawals for September. Okay. So we had a withdrawal of $1,000. Okay. Okay. So you're going to start off with your beginning capital. You're going to add your net income or loss, whatever you have. If it's a loss, it's a minus. We're going to subtract any withdrawals that we had for September. Okay. And that is going to be our increase in capital. Now it's an increase because net income is greater than your withdrawal for September. So it will be your $6,400 minus less the withdrawals for September, which is $1,000. So that will be $5,400. Okay. So let's run through this again. You start off with your capital, which was provided at $10,000. You bring in either your net income or your net loss. Now be very careful. If this is a loss, then this will not be an increase, but rather a decrease in capital. Why? Because you lost money, and on top of that, you would have made a withdrawal for yourself. So all of this is money leaving the company. So your capital is decreasing. You're having less money on your business because you made a personal withdrawal and you lost money in your operations. Okay. In this case, we had net income. Net income is a positive number. Then I'm going to deduct less the withdrawals for September. So it will be this number, the $6,400 minus the $1,000. It's a positive number. So that's going to be an increase of $5,400. Okay. Make sure that when you're doing your calculations, you subtract. It's less the withdrawal. So it's $6,400 less the $1,000 gives you the $5,400. So we have an increase in capital of $5,400. Now we can calculate our ending capital balance. This is our ending capital at the end of the month. So we started off with $10,000 in our capital account. During the month, we generated an extra $5,400 in capital. That our capital increased. Why? Because we generated income of $6,400. Then we subtracted $1,000 for our personal withdrawal. So that caused an increase in capital of $5,400. So now my ending capital is going to be my beginning balance of $10,000 plus my increase in capital of $5,400, and that would give me $15,400. Okay, so that is my ending capital balance. So Juanita Rey capital went from $10,000 last month to $15,400 this month. Okay, so I'm going to go ahead and I'm going to mark off the account that I use, and I use the drawing account. Okay, so I scratch that off. Okay, now I'm going to do my balance sheet. Okay, and for all of these financial statements, we always put the title of the company. This is Juanita's Delivery Service. The name of the financial statement that you're preparing. This is the income statement. This is the statement of owner's equity. And this is the balance sheet. Now, and for the period that we're doing it. The income statement and the statement of owner's equity are for the month of September, for the entire month. This is what happened during the month. The balance sheet is as of a point in time. As of today, September the 30th, this is what I have. Okay, this is as of a point in time. Okay, so the balance sheet is broken out by three categories. We have assets, Okay. We have liabilities. And we have owner's equity. So we have three categories. Okay. Now, whatever you have on the left-hand side, you have to equal on the right-hand side. This is a balance sheet. Assets need to equal your liabilities and owner's equity. If you don't balance, you made a mistake somewhere, and we need to figure out what it is, and we need to fix it. Okay? So, assets is anything that we own. Okay? What does a business own? Okay? And assets are usually the first things on your list. Okay? So we have to identify what is an asset. Okay? So we know from prior chapters that assets include cash, accounts receivable, supplies, prepaid insurance, and the delivery equipment. All of these are my assets. I own all of that. I own my supplies. I own my equipment. Prepaid is an asset. Why? Because I've paid for insurance in advance. I own that insurance for the next year. Okay, so those premiums have been paid for. Okay, cash is in the bank. That's my cash. So all of these are your asset accounts. Okay, so we're gonna bring all of that information down over here. Okay, so I'm just gonna copy and paste. I have cash. I've got accounts receivable. So it's very important that by now you should be able to identify what an asset is, what a liability is, and what owner's equity is. Okay. Delivery equipment. Here we go. So that is what we have, and now I'm going to put my dollar amounts. I have $5,000 in cash. I've got $3,000 in accounts receivable, $800 in supplies, $600 in prepaid insurance, and $8,000 in equipment. Okay. Let me just put some commas so it can just be a little bit cleaner. Okay. And I put an extra zero. Be very careful when you're doing your math. You see I entered an extra zero. So now those are all of my assets. I am going to calculate my total assets. Okay. So I'm going to add all of these together and let's see what we get. I get 17,400. That is my total assets. So whatever I get over here on this side needs to be 17,400. Remember, this side needs to equal this side. Okay. So I'm going to go back and I'm going to mark off all of the accounts that I used. Okay. And why do I do this? Because I want to make sure that I use up all of my accounts. Okay. That I didn't miss anything. That everything's accounted for. So you can just highlight if you have these numbers in front of you, you can just highlight them. Okay. Okay, this is the last asset we have. There we go. Okay, so I've scratched off all of my asset accounts. Okay, now we have liabilities. What is a liability? A liability is anything that you own. This is debt. This is what you owe to creditors, to other people outside of the business. We have an account called accounts payable. So everything that we have, and anytime we have the word payable in it, it's a liability. We can have accounts payable, notes payable, salaries payable. Anything that's the word payable, it's a liability, and we have to include it under our liabilities. Okay, so we have one liabilities account, which is accounts payable. My accounts payable amount is $2,000. Okay, so we only have one. That's my total. Let me mark that off. That way I know that I've used it. Okay, so by now I've used all of my numbers. Okay, so you might be saying, well, how are we going to fill out the owner's equity section? Well, that is coming from over here, from your statement of owner's equity. Okay, that is where we're going to be getting that information from. Okay, so on your owner's equity, I'm going to bring in my ending capital balance. So we have Juanita Ray capital, and the amount that we calculated was $15,400 right there. Okay, So that number, I'm going to plug it in over here. Okay? So whatever you get here, you're going to bring over to this side over here. Okay? So you see, whatever I calculated on my income statement, this flows over to my statement of owner's equity right here. From your statement of owner's equity, your ending capital balance, that flows to your balance sheet. Okay? So now I can get my total liabilities and owner's equity. Okay? So I'm going to add these two numbers together. You're going to add your total liabilities plus your total's equity, and we get 17,400. Okay. So if you notice here, my total assets equal my total liabilities. Okay. So these are the three financial statements. On the income statement, you calculate your net income or your net loss. On your statement of owner's equity, you figure out if your capital increased or decreased. Okay. So if you have net income, you're going to get your net income less your withdrawals. If that number is greater than that, you're going to have an increase in capital. If you were to have a loss, it's going to be your loss plus your withdrawals, and that's going to be your decrease in capital. If you have a decrease in capital, you would get your beginning capital minus your decrease in capital. Okay. If your capital increased, then you add them together. Okay. And then you calculate your ending capital by getting your beginning capital plus your increase in capital based on the transactions for the month. And that's going to give you your ending capital balance, which is going to flow over to the next period. Your balance sheet basically balances the accounting equation. It's your assets equal your liabilities plus owner's equity. Okay, so here you list all of your assets, all of your liabilities, and then you bring in your ending capital from your statement of owner's equity, which you calculated, and then you calculate or you make sure that your total assets equal your total liabilities and owner's equity. Okay, so these are the three financial statements that you're going to be preparing. You're going to be able to have an opportunity to practice this on your own. Please make sure that before you practice or before you attempt your assignments that you have read the chapter. Okay, so that is basically it for this lecture. If you have any content related questions, please ensure to either send me an email or a Blackboard message. Please include your name. Please include the problem that you're having issues with. Show me your work. What are you doing? So I can follow back and see what you're doing and give you guidance. Okay, and include your specific question or questions. Okay, and I will get back with you as soon as possible. Okay, so that is it for this lecture. Until next time.